Even with today's moves, though, the Dow is still on track for its worst month since August. But what important factors and which important stock plays should you be watching for next week? Can the markets turn around in 2016? Joining me now, Tom Lydon, ETFtrends.com CEO, and Moody's chief economist and managing director, John Lonski. And I wanted to call this Surprise Me ETFs. Because, Mr. Lydon, that's your expertise, and we're looking at exactly what we should be putting our money in, but maybe yesterday was the day to do it.
Well, it might have been a rebound rally today, Liz, but you got to pick your spots. 3 spots. Number 1, consumer staples. XLP. It's all about soap, Coke, and smokes. This is what Americans will buy whether the economy is good or bad. The other thing is financials. Banks' earnings are great, and even though Yellen may only hike 2 times this year, borrowing costs are going up, more profitability for banks. And finally, it was nice to see what happened in Japan, but Japan's out of bullets. If you look at Draghi, they have a lot more to go regarding monetary easing, and you need to hedge your bets regarding the currency. So the Deutsche X-Tracker's Currency Hedge Europe ETF, DBEU, is something to consider.
Well, Tom just gave us these 3 names, John, but they sure do depend a lot on people feeling that the U.S. economy, at least for the consumer staples names, is recovering. Is it? Because I don't know if you just heard Charlie Gasparino saying that maybe Janet Yellen's so scared because she sees something on the horizon that we don't.
That's true, and we have to be concerned about the U.S. economy because if you take the consumer out of fourth quarter real GDP would have contracted. We'd be looking at a recession. We're not there yet, thank goodness. We did get growth by real consumer spending. We got a big increase by real residential investment spending. That's housing. So it is good news. And we have the return of a 10-year Treasury yield under 2%.
But what about
That'll
GDP?
push mortgage yields lower
John,
and perhaps provide some necessary buoyancy to... Yes.
The GDP number, 0.8%, or 0.7%, it missed the expectation, and we were at 2% for the previous quarter.
And we hope to go back up to about 2% for the first quarter of this year. That's nothing to crow about. And if brings attention to the fact that the U.S. economy grows slowly. We have a lot of problems overseas. We have a strong dollar. There's going to be a lot of downward pressure on corporate revenues, especially those U.S. companies that have a great deal of global exposure. So I think you're making a mistake if you extrapolate too much good news from today's equity market rally.
Well, okay, and right now we're very close to session highs, up 379 points. I keep crossing out my notes here because we keep going higher and breaching the ceiling here. Tom, looking at the stock opportunities, you say pick your points, and I completely agree with you, but when you pick ETFs, aren't you getting a bunch of or maybe a few bad names with some good names, and net it ends up being neutral? Why not just pick a single stock?
Well, Liz, there are $14 trillion in mutual funds, some of the best minds on Wall Street, but over 80% of them can't beat the market. So if you want to pick stocks, that's great, but keep your important money, your core money, in low-cost ETFs where you're at least performing in line with the market. If you want to take a portion and go out and take some high flyers, bets on managers that maybe have a hot hand, but they're very inconsistent over time. You know, you look at just technology alone, the FANG group, 2 great, 2 terrible. Who would have picked the best within those 4?
Yeah. Well, Facebook, of course, Amazon, moving in completely opposite directions right now. Facebook is looking fabulous. Right. Amazon's getting crushed on a bad number here. But going into the session, just at the top of the hour, the Dow high was 317. Look at it now at 356. It seems that in this final hour, people are looking and saying, I want to jump in, I want to jump in. Is that the right way to be?
Only if you're a day trader. I think if you're a long-term investor, you have to be very careful. You want to focus on high-quality blue-chip names. You want to stay away from companies that may have some sort of financial weakness or too much competition, too much overseas exposure.
Great to see both of you. Tom Lydon of ETF Trends and John Lonski, Moody's managing director and chief economist.